Hello and welcome to our special Budget Day edition of Power Breakfast. I'm Nigel D'Souza and joining me is Manglam Malu. Manglam.
It is a big day, Nigel, so let's kickstart the show.
Well, let's get straight to it. It's the day, and a few hours from now, Nirmala Sitharaman will present her fifth union budget in the Parliament. It's the last full budget before the 2024 elections, and the Finance Minister is likely to attempt a balancing act between populism and fiscal prudence.
The budget is likely to recognize the contribution of the middle class in India's growth story. Sources tell us that the government could announce measures to address concerns of the aspirational classes. A new tax slab may be on the anvil, while a number of tax benefits could also be announced, and a big focus on job creation. The government may also unveil a scheme to increase urban employment.
The recovery is complete, says the Economic Survey. Projects a 6.5% real GDP growth and 11% nominal GDP growth this fiscal. The survey also says the government is on track to achieve fiscal deficit target of 6.4%. But the report also flags caution on the rupee, saying it could weaken if the current account deficit widens further.
We also have a lot of cues coming in from individual stocks. Coal India reports an all-round beat with a healthy operational performance in the third quarter. Also declares an interim dividend of a little over 5 rupees per share for the current fiscal. Indian Hotels reports its best ever quarterly revenue, while profit rises more than fourfold to a record 403 crore rupees in October-December quarter.
Wall Street rallies to end January on a strong note ahead of the Fed rate decision. Stocks in Asia Pacific, they open mixed, while the SGX 50 signals a higher start for the Indian markets. Well, Finance Minister Nirmala Sitharaman will present the budget at a time when the global economy is reeling under recessionary pressures. Aiding GDP growth while maintaining the fiscal deficit target will be a tough job for the Finance Minister. This is also the last full budget of this government, and expectations are high among the common man and the salaried taxpayers as well, that there will be some changes in the income tax rates, income tax slabs, or even a new income tax regime.
Right then, let us get straight to our colleague Parikshit Luthra, who joins us from outside the Parliament, where the union budget will be presented in just a few hours from now. Parikshit, tell us what's happening out there and what is one to expect?
We have been hearing that Budget 2023 could be dedicated to the Indian middle class. We hear that the government will work towards reducing the tax burden on the aspirational Indian, putting more disposable income in the hands of the middle classes. At the same time, there is an expectation that a new tax slab will be introduced for the 8 to 10 lakh category, and the tax rate here will be reduced from 20% to 10%. Also, when it comes to those earning more than 10 lakh rupees per annum, the tax rate could be reduced from 30% to 25%. Increase in benefits under ATC for housing loan and medical insurance are also among the key expectations. On the job fronts, we believe that Budget 2023 could have a big focus on jobs, with a scheme to increase employment in urban areas, a scheme to give loans to gig workers. On MSMEs, the Finance Minister may nudge banks to lend more with interest subvention schemes and loans without collateral. The capex push for infrastructure will continue in Budget 2023. We could see announcements on lifestyle for environment, on clean energy, on battery storage as well. This is the last full budget ahead of the general election next year, and the government will try to strike a balance between populism on one side and fiscal discipline.
Okay, thanks a lot for that, Parikshit. Well, in fact, our Prime Minister, speaking ahead of the budget session, said that this year's budget will not only try to fulfill the hopes and aspirations of the common man in India, but also be the ray of hope to the world.
डावाडोल विश्व की आर्थिक परिस्थिति में भारत का बजट भारत के सामान्य मानवी की आशा आकांक्षाओं को तो पूरा करने का प्रयास करेगा ही, लेकिन विश्व जो आशा की किरण देख रहा है, उसे वो और अधिक प्रकाशमान नजर आए। मुझे पूरा भरोसा है निर्मला जी इन अपेक्षाओं को पूर्ण करने के लिए भरपूर प्रयास करेगी। हमारी कार्य संस्कृति के केंद्र बिंदु में भी एक ही विचार रहा है इंडिया फर्स्ट, सिटीजन फर्स्ट, सबसे पहले देश, सबसे पहले देशवासी, उसी भावना को आगे बढ़ाते हुए ये बजट सत्र में भी तकरार भी रहेगी, लेकिन तकरीर भी तो होनी चाहिए.
All right, so the stage is set, but before the big match, let's talk about the pitch report. What should we look out for in terms of a trade setup for today? Nigel, not only the budget, we have, the US FOMC meet outcome later today as well. How does the pitch look?
Well, Mangalam, 1 down, 2 to go. You had the Adani FPO that the market was a little bit worried about. That sailed through. Now all eyes on budget 2023. And later tonight, we'll get the Fed decision as well. So let's hope those two as well go according to plan. For starters, the budget 2023, you don't want any untoward decision, something that will hurt the markets. And the second factor is 25 basis points is probably baked in terms of the Fed decision. What is the FIs doing, though, in the FNO market? Well, yesterday they added shorts big time. Close to around 22,000 short contracts is what they added in trade yesterday. That's in the ratio of close to around 7 shorts for 1 long position. And that takes the short positioning to around 82%. Or put it differently, the net short positions, that's the short minus the long positions, is nearly around 95,000 short contracts. So they are clearly expecting a bit of a downtick. If that doesn't come about, you're going to be seeing a big short covering bounce that plays out. But, it seems they're hedging themselves because they bought some calls as well, which is a bit of a bullish indicator. And they're writing puts. So maybe they don't expect a sharp fall, at least in the near term. But Mangalam, what does history suggest, in terms of the FI positioning and the moves?
Well, as far as history is concerned, I was looking at the FI positioning ahead of the budget for the last 7 years in a row. 4 times they've gone into the budget net long. I mean, Feb 2017, they were 78% net long. Feb 2019, they were 41% net long. So that was the first time in the last 7 years that they were net short. And then Feb 2021, they were 63% net long. How do they go into today's trading session? Just 18% net long. In the past, if the history is something to go by, every time they've been extremely long on the index. Feb 2017, for instance, 78% long exposure, the Nifty was up 1.8%. Feb 2021, 63% long exposure, the Nifty was up 4.7%. However, when they were net short, say Feb 2020, the Nifty actually fell by about 2.5%. They were net short by about 85%, net long just 15%. The question is what happens today? Because we've already seen a big decline. And secondly, Feb 2020 decline could also be attributed to the coronavirus uncertainty more than the budget. So the question again, 3 question marks. Where do we go here?
Well, Mangalam, since you spoke about the pitch report, it's reminding me a little bit about Rahul Dravid. I'll tell you why. Because the FIs, they're coming in there and they're selling big time. Yesterday as well, they sold close to 5,500 crores. And if you look at it, on an average, for 3 sessions, they have been selling close to around 6,000 crores per day. So, it's like those Australian bowlers coming in there, they're bending their back, putting their best effort on the green top. However, Rahul Dravid is batting that out. The Nifty is down 200 points when you have 6,000 crores per day of net sell number, in the last 3 sessions or so. So that's telling you the kind of resilience in our markets.
Yeah, you're talking about the Australian cricket innings, etc. It reminds me of Sachin Tendulkar as well, who never hit a cover drive and just ensured that he stays on the ground, made 241. The FIs, this month itself, they've sold almost 42,000 crores. In fact, in this, after selling 2.5 lakh crores in the previous year, the DIIs are playing their part and the Nifty has corrected about 1,200 points from its all-time high. So there has been some correction already. Is there room for up move is what we're looking at. What's the range?
Well, Mangalam, we always track the options data very closely, right? And it seems this fun and games have started because the 18,500 call and the 16,700 put, which is very, very far away from where we are at currently. They were very active yesterday. Yeah. So you require something really, spectacular to happen to see the market move in that direction, close to around 800 points on the upside or maybe 1,000 points on the downside. So that appears a bit of a punt. But what's encouraging for me is the 17,400 put. Well, there appears that is being written over the last few days. So now we are still in the range. We've been talking about range. Earlier, the range was around 17,800 to around 18,200. Now that range has got reset. 17,400 on the downside to around 17,850 on the upside. That's the new range that I'm looking at. And I expect it to be maintained. In terms of levels you're looking at, well, the 20 as well as the 100 DMA, they come in closer to around the 17,950. So, that's a firm resistance according to me. Right. While the 200 DMA, I think that level is going to hold out. And my gut is, if there's no negative surprise, maybe we've made a bit of a near-term bottom around that 17,350, 17,400 odd mark. But what else, Mangalam?
That's, absolutely spot on as far as the range is concerned, Nigel. The question is what can make or break this range, right? On the way down, we will look at any nasty surprise coming in that could break that range. But on the way up, if there's no nasty surprise coming in, then there could be a big up move. So what are the things that we're watching out for in the budget? The first one from the stock market standpoint, no announcement from a stock market related tax announcement coming in would be extremely positive. Any SOPs coming in to boost consumption, positive for all the FMCG consumer discretionary names. We'll watch out for what the government does to spur economic growth. Is it via the capex route? Is it via the spending route? Then accordingly, those stocks will move around. And in terms of stock, the most important
ITC.
stock to watch out for every budget is ITC. Any sort of announcement coming in on the tobacco tax regime would move ITC. That's as far as the budget is concerned. The US Fed outcome, that's important as well. Like you said, 25 basis points hiked in, or rather the hike has been priced in. The Nasdaq is up 10% this month, and history suggests that every time the S&P 500 is up 5% in January.
Good year, go ahead.
The good year, I mean, it's 30% higher for the year. So that's what history suggests. Let's see what we'll do this time around. In fact, let's also talk about the global pitch this time. The global markets will be tracking this morning is the FOMC decision, which is due later today. Ahead of that, we've seen a big rally on Wall Street after a big decline that we saw in the previous year itself. We have the Asian markets, which are starting on the front foot too. We have the Taiwanese index up about 0.6%. The Hang Seng is up about 0.5%. Nikkei doing extremely well as well. What does all of this mean for the SGX Nifty? Well, a 120-point bump up at the start itself before the budget session. Let's see where we go.
All right. Well, in the US markets, Wall Street rallied on the last day of January with the Dow Jones closing over 1% higher. The S&P 500 as well as the tech-heavy and Nasdaq, all of them ended with gains of around 1% to around 1.5%. CNBC's Bertha gets us a wrap of what transpired on Wall Street.
Stocks closing higher today after a slew of strong earnings, adding to already strong gains for January as the market erases some of last year's losses. The Dow closed up more than 1% and gained almost 3% for the month. The S&P ending up 1.5% higher today. It's up more than 6% to start the year, the best January showing in 4 years. And the Nasdaq added over 1.5%, soaring by almost 11% for the month of January. General Motors, a standout, up more than 8% on the day. The automaker reporting quarterly profits above expectations, and it's forecasting solid results for this year. ExxonMobil also closing higher, up more than 2% after generating $56 billion of profits in 2022. That's a record high for a Western oil company. It works out to about $6.3 million an hour. Meantime, PayPal is cutting 2,000 jobs. That's about 7% of its workforce. The online payments company is blaming what it calls a challenging economic environment. That's the action here in the U.S. Now back over to you in Mumbai.
All right, budget. Thereafter, we have the big Q coming in from the US as well. The US Federal Reserve is due to announce its policy decision later today. A 25 basis points hike is widely expected, perhaps priced in as well. CNBC's Steve Leisman files us or joins us with this report and the key takeaways from the CNBC Fed survey on what is to be expected. Let's hear him out.
Look at the Fed expectations chart from the survey. 100% seeing that quarter-point hike this week. 82% see another hike coming in March. The funds rate then reaches the peak of 5%. That's the average forecast by April, where it holds on average for 9 months. But then 44% seeing cuts by December, with a handful expecting them as early as September, and another small handful expect those rates hikes to continue through December. So here's the outlook from the funds rate. For the funds rate from the survey, 4.38 is the current rate, goes up to 5% by April, comes down to 4.69, which, by the way, is a bit higher than the funds market pricing is. And then again, it comes down even more next year, December 24, 3.76. Highlighting the gap between the market and the Fed, Steve Blitz of TS Lombard doesn't hold back. He says the idea the Fed is going to hold at high rates is silly. Once employment growth slows to 100,000 per month or declines, the Fed will end up with the funds rate less than inflation. Asked if the Fed is really watching the data, 58% said, yeah, the Fed is data dependent, but a pretty large 42% think the Fed is headed to 5% regardless of what the data say. What about the reasons? Why are the Fed and the market in different places? 39% say it's because the market is more optimistic on inflation. 24% believe the market is underestimating the Fed's resolve. 9% say it's because the market's more pessimistic on growth, and another 9% say it's because of difference on what's being forecast. Another chunk of folks say it's because people believe in the Fed put. The Fed is not going to hit its 2% target for some time, according to this survey. Not in 2023. 47% do see the target coming in being hit in 2024. 36% 2025 and later. 15% say, hey, it's not going to happen. But a vast majority don't think the Fed changes that 2% target. All right, so the 44% banking on a cut. They're up against a Fed that made a point in the minutes of the last meeting to note that no Fed member sees cuts this year. We'll have to wait for the meeting and the press conference, guys, to see if the Fed and Chair Jay Powell dig in their heels on that forecast or, which is what I don't expect, take a step towards the market's view.
Well, as we slip into a short break, here's a quick reminder that we'll have the very best policymakers, market masters and tax experts as budget editors to take us through all the major announcements that come through on Budget Day today. Stay tuned for the in-depth analysis and expert opinion all through the day, only on CNBC TV 18.
You're tuned into CNBC TV 18. This is Budget Breakfast. Ahead of the budget, yesterday we got the economic survey as well, and the recovery is complete. That was the key message coming in from the 371-page economic survey, which was tabled in the parliament yesterday. The first economic survey since the start of the Russia-Ukraine war. It highlighted that prudent assumptions in the last year's budget actually provided a buffer to the government during global uncertainties. The survey highlighted that India has moved on from its encounter with the pandemic and projected a real GDP growth of 7% this fiscal. It's also forecast 6.5% real GDP growth and 11% nominal GDP growth in FY24. The survey said that the government was on track to achieve its fiscal deficit target of 6.4%. It stressed that the availability of fiscal space is paramount amidst global uncertainties. The survey has warned that entrenched inflation may prolong the monetary tightening cycle, keeping borrowing costs higher for longer. However, it's added two silver linings. One, lower oil prices, and second, a better current account deficit position that will make the external situation manageable.
The downside risk is higher than the upside to that baseline estimate. And when we talked of entrenched inflation and tightening cycle could prolong, that is something that we spoke in the global context. Domestic context, I don't see too many risks to growth. It is something that India has to do not on an either or basis, but on an and basis. That is the investment requirements for us to move from lower middle income to middle income category countries is to have investments coming both from the public and the private sector. Balance sheets are very important drivers, and so are current profitability trends, and both of them are pretty robust for the corporate sector to invest, and they have been investing. There is no reason to believe that the government is deviating from the fiscal consolidation path. Few years of steady nominal GDP growth will cause a meaningful reduction in the fiscal deficit parameter.
Well, Mangalam, we have given the market setup, how the global cues as well are looking at, but there are going to be plenty of stocks that are going to be in the news today. Sonal joins us early this morning to run us through that entire list. Morning, Sonal.
Good morning, guys. Of course, I don't know much cricket, but since you guys are talking about it, so let's start with Coal India. Hit it out of the park when it comes to earnings this time around. A top-down beat, and it is the earnings beat in terms of sales, which actually flew through their EBITDA as well. So EBITDA at 10,389 crore rupees, margins at 29.5% versus an expectation of 26%, and profit also came in at 7,719 crore rupees. Also watching out for Syngene and Biocon because it has been in works as well, and now sources are suggesting that Biocon will be selling 10% stake in Syngene today. Offer prices between 560 to 562.3 rupees per share. So that is a big stock to watch out for. Moving on, Cholamandalam, very strong set of numbers. We have disbursals which are up 68% on a YOY basis, up 20% on a sequential basis at around 17,600 crore rupees. Quarter on quarter, loan growth is the best in 26 quarters and on a YOY basis, the best in 18 quarters as well. Indian Hotels, again, strong set of numbers, best ever quarterly show for the company. If we look about the pricing power and operating leverage, that really worked for the company this time around. Compared to pre-COVID levels, revenues are up 23%. We have EBITDA 40% and profit after tax up around 90-odd%. Margins have come in this time around at 35.4% versus 29%. So good set coming in from Indian Hotels. Shriram Finance as well, decent set of numbers. We have disbursals which are up 3.4% on a 13.4% on a sequential basis. AUM is also up 13.2% on a YY basis. And lastly, Adani Enterprises, the FPO, it has sailed through, was subscribed 1.12 times. So of course, that stock will be in focus as well.
All right, Sonal, thank you for enlisting all the stocks that we have to watch out for. And talking about the Adani Group itself, as we told you earlier, let's talk a little more about the 20,000 crore rupee follow-on public issue by the company, Adani Enterprises. It's been fully subscribed, with bids pouring in on the last day of the three-day issue. The QIB portion was oversubscribed and saw demand for over 1.6 crore shares against the nearly 1.3 crore on offer. The HNI portion of the issue too was oversubscribed at about 3 times. This led to the overall issue crossing the success threshold. CNBC TV 18 learns from sources that family offices of many large Indian conglomerates have participated in the Adani Enterprises follow-on public issue. CNBC TV 18 has reached out to a few family offices for confirmation on this buzz as well, and those responses are awaited.
Well, on that note, let's get you another crucial update then. CNBC TV 18 spoke to MSCI about the recent reports concerning Adani Group entities. MSCI responded to our channel saying that it is aware of the reports recently published regarding the Adani Group and associated securities, and that it is closely monitoring publicly available information regarding the situation and the factors that may impact the eligibility of those relevant securities for the MSCI Global Investable Market Indices. At the same time, MSCI stated that it's welcoming timely feedback from various market participants on these issues. They also said that any change to its indices will be announced to all its clients simultaneously, while adding it may communicate further as more information is available.
All right, so that's about the Adani Group FPO. But the big Q today will be the Union Budget, and India Inc. has a lot of expectations from the budget as well. So let's hear out some important voices coming in from the market and the corporates.
I think this government is really focused on pushing the infrastructure bit, and I'm very happy that this bit government is working on, and I think this budget will further give boost to the infrastructure spend.
When it comes to budget, of course, savings I think needs to be encouraged in the economy, and particularly the kind of growth rate which we are envisaging, which is essentially about, from the current level about 6%, we need to go up to about 8%. So to promote the savings, I think there would be, we expect that if at all there could be some relief from the taxation point of view as far as the interest income is concerned on the deposit. That will probably go a long way in terms of supporting the economy as well.
Coming budget, the momentum that the railways have found over the last few years under the current government will continue. The railways have clearly a target of moving to 3,000 million tons by 2030. And in order to achieve that, there is going to be a large-scale investment that is required, both in terms of infrastructure, more so in rolling stock, in freight wagons. And we are expecting that the momentum of the railways towards achieving that would continue in the forthcoming budget.
India is a bright spot in the current global environment, and my sincere hope is budget will provide the continued support for this momentum for India's digital story. It's a very high-level, broad expectations.
Well, on that note, we'll wrap up on this edition of Budget Breakfast, but you stay tuned to CNBC TV 18, a power-packed lineup all through the day.